Today's topic is achieving high productivity in sales. And I'm thrilled to have with me Jay Crowell. Jay is president of the National Retail Division for Cornerstone. Jay's had a long career within mortgage banking, and I'm thrilled to speak to him. Hi, Jay. I'm so excited to talk to you today, especially about how fabulous your results are at Cornerstone and talking about productivity. So before we jump into that, let's talk about the famous question about how did you get into the mortgage business?
Well, good morning, Pat. It's good to spend time with you. I would say I was running a basketball development program
Wow.
and I was wrapping up my degree. It was a business degree with an emphasis in finance and was focused on going into wealth management or working maybe corporate in a corporate environment. And one of the parents in my program, so I was training his kids, he was a manager at a large mortgage company. It was actually a bank, but in their home loan division, and
Mhm.
just kind of approached me about becoming a loan officer. And I ended up having a lot of good opportunities. I was fortunate,
Uh-huh.
but ended up choosing mortgage banking because
So,
I felt excited about being able to serve a broader range of people, and just felt like the opportunity to help people. So much of my childhood, all my good memories was around home, and to be able to make home possible for people was really exciting. And, I was 22, 23 at the time,
sure.
and I thought, there's a lot more people that I know that could, benefit from home ownership than I thought that were like could invest, 3 or 4 or 5 million dollars, and so I was just was excited about offering something that everyone could benefit from. Whether you're a multimillionaire, you can still
Yeah.
benefit from using a mortgage, or if you're a first-time home buyer, fresh out of college, like my wife and I when we bought our first home. So I think that's what appealed to me, was being able just to serve a big audience and not be, having to,
Yeah.
focus on the, the high, the 1 to 5 percenters of the world.
Well, I certainly we're glad that you joined us because our industry is certainly does all the things you're talking about, which I think most of the people that have been in it a long time, like yourself and myself, that's what we love about the business. So that's great. So talk about, since you've been in the business for obviously a long time, what do you see lenders not doing or focusing on and what they should be? Kind of what is kind of your view of all that?
I think people lose sight of the mission of what we do, and why we got into it. And so
Hmm.
where what I think people may lose sight of is what are the core values, what's the mission, what's the purpose of what we're doing,
Hmm.
and how are we living those out and serving at a high level. I think because once you kind of get in the game, then you start thinking about the scoreboard and you think about surviving, or, making money, being profitable, and that game of
Hmm.
external rewards, or results, or external, affirmation, whatever you want to call it, the goalposts always move. So if you
Hmm.
hit this level of success, that becomes normal. So then we have to add a new goal. And there's nothing wrong with that. But if we lose sight of our mission, our purpose, our core convictions, the why behind what we do, and it becomes result based, performance based, then I think we start making, the wrong decisions. I would say the other thing that I hear, I just think the messaging that I think is probably a little sad in our industry is just how much inner competition there is, and there's not enough like, hey, I'm excited about your success, and
Hmm.
we want everyone to win, and that doesn't we're not in a zero sum game. There's not
Hmm.
like one great company, everyone else sucks. I think there's a lot of great mortgage companies, there's a lot of great platforms, and people just need to figure out what they're trying to do. And it needs to be more about all the marketing, all the recruiting
Hmm.
is like, come here, you'll make more. Come here and you'll make more. You can earn more here, and we got better rates. And it's kind of like
Yeah.
there's a lot of game with all that, because we're all going to Fannie Mae, Freddie Mac. And sure, maybe there's some differences,
Hmm.
but at the end of the day, do you have a mission and a vision that's aligned to things that are actually going to last? Because I feel like for me and the people that I know that have had long-standing careers that get up and they keep driving, it's more than just the next level. It's more than just making more, earning more. It is about contribution. And I really believe, we win from within,
Hmm.
not vice versa, and that our intrinsic motivators are the rocket fuel that lasts for the long term. And
Hmm.
so, we hear a lot of people talking about burnout in our industry. And I think if you're burning out, that means you're letting the externals impact your internal versus the opposite of having your internal impact your external.
Wow, great. I agree with you 100%. And you make the really good point. And I do think lenders kind of get off market, and as a result, you're left to think about it as a zero-sum game, and it's not really, for sure. So it leads to kind of talking about also the consumer journey. And I'm interested to hear kind of what you think. I mean, it's obviously changed a lot over the years. It's changing rapidly now. And so if you had to look maybe 3 or 4 or 5 years out, the customer journey and how that's going to impact our industry.
Well, I mean, obviously we have this, big movement of AI, and
Sure. Mhm.
we are moving away from like the information that's available to us and the speed that it can be available is, really high. So I believe that the differentiator is going to be the human element.
Mhm.
And so I think that for people to continue to thrive and survive, you're going to
Mhm.
have to be good and proficient at harder loans,
Correct.
because the machine can already, and will be doing it more and more, can do the
Mhm.
easy loans without a loan officer, without a processor, without
Correct.
an underwriter. And so I do believe, the segments of being able to juggle the hard loans. And then I think at the end of the day, buying a house is a huge emotional
Mhm.
decision that
Mhm.
ChatGPT or an AI bot isn't going to be able to connect. So my reality is that it's going to be something that people have to evolve with. But I think things that we can control is, how are we growing in our emotional intelligence? How are we connecting with
Mhm.
people, really identifying their needs and being able to serve that at a high level. So ChatGPT has all the same knowledge that I have. They don't have my experience as a person.
Correct.
And all the clients that we get to serve are people. And I think that I believe that the highest use case where I think that's happening is AI are people that are a little bit older. And I believe that this next wave of buyers,
Mhm.
they're going to use it to get informed, but they're still going to want advice from somebody that's
Mhm.
real, because I think that there's a big move of like, how much of the advice is real, how much of Instagram is real to them. Not that they're
Correct.
not in it, but I think there's a big push away from some of that from this millennial
Mhm.
buyer cohort. But I think that at the end of the day, we have to be able to have a tangible way to articulate value
Mhm.
and serve them, proficiently and effectively. And so we are going to have to leverage the technology and utilize
Mhm.
the tools to make us more impactful and meet them where they're at. But when they get to the times of advice, then our availability for them in those moments when they need the handholding, when they need,
Mhm.
the mentorship to and the counsel that is a dealing with the emotional stuff. I think there's going to be less conversations explaining how escrows work in the future, but they're still going to need help understanding why homeownership is a good decision and evaluating the pros and the
Correct.
cons on those details, and understanding that homeownership, yes, it's a great financial decision. And yes, there is some benefits from
Mhm.
a tax perspective, but
Yeah.
there's also an intrinsic huge value beyond the need of shelter, being able to have control of your own destiny and be able to the meaning of what that means to own your home, and help people understand that ownership is beyond the shelter need. The next real need you're meeting when it comes to buying a home is lifestyle.
Sure. No, I agree with you 100%. I don't, sometimes they think people forget all that, and loan officers do for sure. So, but let's take a deeper dive, Jay, into talking about Cornerstone. And why I wanted to have you on here is that you outperform in production per loan officer many of the top lenders or the larger lenders in our industry. And that is, and you've done this now for a while. And you kind of talked a little bit about how you, in other words, the last time I talked to you about the mission and the purpose and so forth. Talk to us about the real reason why you see that you're able to produce at a high level at the loan officer level.
I would say that, there's probably some core commitments to our philosophy is we do want people that understand our core convictions and our
Mm-hmm.
mission. And I think that for those, if that resonates with them, then that's going to be somebody that does want to give their best. They're not like pursuing mortgage as a part-time job or an
Yeah.
alternative to being a barista, right? Like I could go work, if I was a loan officer, I do one or two loans, a
Mm-hmm.
quarter or one loan a month. I can work probably, 8, 10 hours a month, or maybe even less or a little bit more. And I can make the same if I worked full time, at Starbucks. That's not our target. Now at the end of the day, we do want people that live our values. And that doesn't mean, somebody that's closing, $15 million a year. Like we love that individual. We love that person.
Mm-hmm.
If they're contributing, my belief is I don't want to have somebody that closes, 20 units a month and the reputational impact that they have in their community isn't going, hey, Cornerstone's doing a great job. Whereas you could have, 5 loan officers that close, 2 to 3 units,
Mm-hmm.
and those individuals, have raving fans, and they all 20 of those loans are saying, man, working with Cornerstone is great. That is what we want. So we want a great customer impact. We want people that are being able to fulfill their goals. We really do believe in work-life balance, and we want people to have,
Mm-hmm.
great marriages and great,
Mm-hmm.
relationships with their kids if they're a parent. We want them to be involved in their community. We want them to be well-rounded. I've worked at companies where, like I was crushing it, and every time I talked about a vacation, they were like, "What? Where are you? You're going somewhere again?" And it's like, what are you worried about? Like,
Yeah.
and so I'm not working just to continue to work. I don't live to work. I work to live. And,
Mm-hmm.
and we definitely have that approach. But I believe that when you're pouring into people, giving them a lot of resources, showing them what's capable, helping them be able to do more production and hopefully less time, that permeates through. So our when there's a lot of people that are committed to serving their community at a high level, there is a snowball effect. And so from founder to CEO to leadership, we really care about supporting our referral partners.
Mm-hmm.
And so whether it's builders or agents, we've had, a core commitment to closing on time every time. And so that has an impact. And so when people are doing a good job and they're in a positive ecosystem, that reputational
Mm-hmm.
performance leads to the snowball effect. Clients want to reuse those loan officers again. Agents want to recommend that. And so, Mark Laird, our founder, he has never given us, focus on market share, being in specific markets. It's
Mm-hmm.
always been any market we're in, we want to have a reputation that the builders and the realtors say, hey, I don't know who you're going to work with, and obviously we can't tell you who to work with, but we'd love it if Cornerstone was somebody you consider.
Mm-hmm.
And so having that approach of like, we're going to focus not on market share, it's going to be on a customer service experience, it's on a partner service experience, and then helping people grow that way. And then not having to be, like, you want to be in XYZ city, and maybe it's not a huge market, and there's 4 loan officers that are great in that market, and you target those people, and they say, hey, I'm happy here, I like my company, great, we respect that. Like, we're not going to keep going crazy. We're not going to write some insane make them
Mm-hmm.
move offer. And because we want a sustainable model, we also want to hit the 3 buckets that I think are key to lending. And we
Mm-hmm.
also want to honor our existing loan officers, meaning we're not going to go pour out all these resources to go get that one LO, But what happens in that other case is you don't get, loan officer 1, 2, 3, or 4
Yeah.
that are the right fit, that live the core values, that are attracted to what we have for whatever reason. Not that we don't have a great platform, but they're at a good company. Like I said, there's lots
Sure.
of good companies.
Mm-hmm.
And then what happens is, so then the standard next step is, well, then I'll get number 5. I'll go to number 6 because we have to be in that market. And then I think that's where some of those things snowball. So what we've learned is really try to, if we can't get the right people, then we're going to be okay not being in that market, or we're going to be okay with that's as big as we're going to get in that market. Because I
Mm-hmm.
believe when you're chasing market share, that
Mm-hmm.
means you have to chase a lot of production, and that means you have to chase a lot of producers that may not be the right model match.
Mm-hmm.
And I think that's the big thing is you see a lot of companies and they're hiring a bunch, but they're also having people leave a bunch. And so it's like, is that fruitful? And obviously,
Yeah.
people do cycle out for whatever reason, and people change companies for different reasons. But at the end of the day, we're trying to focus on supporting, giving the best to our best, and that is our existing team, and providing them resources and tools. Because of
Mm-hmm.
my kind of coaching background, I was a basketball coach. I was a former
Mm-hmm.
basketball player. We put a lot of emphasis internally around helping people, grow, and a rising tide lifts all boats. So I
Mm-hmm.
think that's some of that ecosystem is we're always just kind of talking about, how to do this better. And we're always focusing on how we get better too. We're not perfect.
Jay, you're raising really great points, and that leads to my next question about, so what do you see, let's say, the more successful loan officers doing that the other loan officers may not be doing? How would you define that?
I think successful loan officers are really clear on their high payoff activities. They
Mm-hmm.
know what moves their business forward productively. They're good at saying no to tasks that are unproductive for them, and they're good at saying
Right.
no to, they have a really strong filter. I was at a conference the other day, and I was talking to a loan officer, and he's not at Cornerstone, but he's doing a great job and doing a lot of production, and his whole focus is on non-QM, and that's where he wants to be really good. And if like the buyer calls him up and says, I want da 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 da, he's basically like, you probably should, based on what you're wanting, you probably should call, the credit union down the
Mm-hmm.
street, because they don't want his value,
Mm-hmm.
they don't want his service, they just want the cheapest, lowest rate, which at the end of the day, that's a whole different conversation. But he's gotten really clear, and he's okay saying, hey, I'm not your lender.
Mm-hmm.
And one thing that we had all of our loan officers go through, a few years ago, so not everyone currently has been through it, but Larry Kindle out of Colorado teaches and wrote a book called Ninja Selling, and he has a ninja
Uh-huh.
certification that was for realtors, but he did one for Cornerstone for our mortgage team. And we went through this installation, and what he basically says is, in your process, you have to understand that if you're not going to serve 100% of the population,
Right. Mm-hmm.
and you need to figure out who are you serving. And in your process of people interviewing you to select you as your lender, you also need to say, are these the right people that you want to serve? And so, like that gentleman that I talked about, he's gotten really clear on who he's trying to serve, what the
Right.
audience he's trying to go after in the market he's going to impact. And I think the clarity of that really does move people forward. And I think if you have this mindset of, I'm going to bat 1,000, every lead that comes to me, I have to convert. That's that's
No.
that's a losing proposition. And so I think you have to kind of say, what are my high payoff activities? Who is my clientele that I'm really trying to serve? How do I really be disciplined with my time? And then build, create teams to support
Mm-hmm.
those tasks, and get yourself out of the energy suck activities as quickly as you can.
Well, I teach prospecting every day, and I have to say, you hit on the key issue that the better originators are able to say, no, this is not a match for me. The
Hmm.
others are not. And it all starts with even understanding that. What I find the average loan officer does not actually know that, or goes through the exercise of it. And so, yeah, you hit on really the key point, which kind of looks at, I guess, this whole issue of the activity. So from your viewpoint, what are the top two? It sounds like the value prop, the targeting, all of that are some of the things that are what move production.
It really is. And I think what you said was really key on
Mm-hmm.
productivity is back in when I got into managing. So I started managing in '06, probably like '07, I had this like, tracker. Some people call them a greatness tracker. Todd Duncan probably had some different ones, but I kind of just said,
Yeah.
hey, I wrote down all the activities that are good activities for a loan officer to
Mm-hmm.
generate business. Some of them are, grill green activities. Some are kind of more moderate
Yeah.
activities. So like a moderate activity, I would say it would be you call every agent on every transaction every Tuesday.
Mm-hmm.
So it's a touch. You're showing your commitment to, communication. You're staying engaged. You're building a relationship. They're informed. If you do a great job, you probably earn an opportunity to maybe ask for business later on. You create some stickiness in those relationships. Is
Sure.
that a true green prospecting activity? No, but it's a really good activity. So that might be one of those activities. Calling past realtors that you've worked with to see if you can go meet with them to have a presentation and share with them, or can you call a managing broker and get into their office and share about a new program or a way that you're solving somebody's problem in your market? And those are green activities that we're talking about prospecting. But back to your point is
Mm-hmm.
I think a lot of loan officers think time and email as productivity. That's not productive.
No, it's right.
Helping the file get moved forward, that's not productive. So
Correct.
we want our processors processing the file, communicating with the consumer. We want the loan officers doing sales activities, because if you get down to brass tacks, the loan officer assistant, they can lock a loan, they can disclose a loan, they can run DU, they can do pre-qual calcs, but what they can't do is they can't really do a great borrower consultation. They can't call the realtors and
Right.
say, hey, I have some solutions that help you solve maybe some of the problems you have. Would you consider sending business to us? So the key activities are, in my mind, are pursuing new realtor relationships by adding
Correct.
value, staying in touch with existing realtor relationships by adding value, having great consultations with your consumers when at the time that they're ready. So, and there should be some barriers to entry to when you have that conversation, right? Like, I shouldn't give you everything on the initial phone call, because I want my barrier to entry for me to have, to want to spend time with the consumer on talking about interest rate, talking about, how to structure financing, how to help them achieve their goals, would be after they've filled out a pre-qualification form and we've gotten their documentation and know that they are pre-approved, so that I'm spending time with capable candidates that are likely to want to work with me because they've done some things showing that now, does that lock them into me? Does that guarantee that they're going to buy a house? No, but I'm not spending time with everybody. I'm spending time that people have walked through the filter. And so that's time efficiency, that's time protection. And then, I think those are the big three ones. And then I think the other thing that loan officers really forget to do is, and this is huge, I pursued the realtor, I got a referral, I got them to make application, I had a good consultation, and then I forget to follow up with those leads.
Wow, true.
Right? And so if you have people in your funnel, that's your gold. And then I think the last one of these things that I think that loan officers need to focus on is, how are you connecting and adding value to your database? Because if you have 3,000 past clients, that's huge opportunity there, right? And that there's companies that their business was called what? Goldmine. So how do you mine your database? And that company is called Goldmine. I don't know if they're still in business anymore, but I think that mindset of my database is a gold mine for people that have worked with me. And that's where it comes back to that premise. If my heart is to serve and my intention is to make a great impact, not get a commission, not make money, then those clients become long-term clients, and they will work with me again, and they will recommend their family and friends to me. And so I see the strong loan officers are the ones that are working, serving their database in a meaningful way, and that year in and year out, and as they do business, that, that is a meaningful leg in their business plan, that they're getting business from their database.
Right.
Anywhere from 30 to 65% of their business should come from database. If you've been especially if you've been in the business for 5 years or more, you should be getting, repeat clients and recommendations to clients from your past clients. And like, I know yesterday I got a call, and I referred it over to the team, from a new realtor saying, hey, my clients bought us a house and they worked with you and they said you did a great job, and I need a realtor recommendation. So I was able to introduce them to a loan officer because they had a
Sure.
great experience working with my historic production team.
Hmm.
So those kind of things, it does start from having a heart to serve, and then being consistent on your non-negotiables.
Well, I'm with you on that topic, but I deal with loan officers every day across the country, and very few of them, even the better producers, don't work their database. I'm with you. But
Yeah.
the reality is, it's such a simple concept, but you don't really see it. If we can kind of flip to the manager side, the sales leadership side, we talked about the difference between the loan officer, the average versus the great. What do you see on the manager side, the difference between the great managers and those that are not?
I mean, I would say the good to great is, how do you
Mhm.
figure out how to connect on an emotional level
Right.
and serve them well, and also challenge and lift them up to be their best, right? We live in
Mhm.
an industry where we would never manage loan officers the way that we do a lot of the time if they were 100% salaried employee.
Correct.
Right? And so we have this threading of the needle. Plus, I'm not saying this is a negative. I mean, I'm a byproduct of the environment. But loan officers, they get all the credit. They get paid, the lion's share of whatever revenue comes into an organization. That's who's making the most. And we tell them how important they are, and they are. But I believe that there is some of this prima donna component because of how the industry gets, and
Yeah.
so we just kind of let anything slide, anything go. And I'm not saying that I'm perfect in this. There's people that like listen to this and go, well, Jay, you let this happen, you let this happen. I'm like, yeah, I mean, at the end of the day, we are running a business, and so you have business decisions you're trying to figure out, and there's also different perspectives, and I think I read a great book recently. It's called The Art of Spending Money. And my biggest takeaways from the book have nothing to do with money.
Hmm.
My biggest takeaway is, don't judge. And with enough information, all decisions make sense. And we might say, wait, well, what about some of the atrocities? And sure, like I'm not trying to say that, like that absolute is probably not an absolute, just like, but I don't believe in any absolutes. So how do we, sift through that as managers of saying,
Hmm.
I'm going to be able to really support, but I'm also going to challenge and hold the line, and I'm going to mentor, and I'm going to do that. So I think the managers that do a great job in serving are able to balance, service, but not be a schlep, right?
Yeah.
And they can challenge but not be like dogmatic dictator. And I think my knock that I've always gotten before somebody ever even talks to me is like, well, I can't work for Jay because he's a huge producer and he expects me to be at that level. And it's like, I don't even care. I don't even care that our team does a lot of production. Now, I
Yeah.
like it, but that's not what's driving me. My
Sure.
focus is, am I living out my core values at a level that's important, that matches my actions, match up here, that match up with how my parents raised me. And so some of that's just a byproduct of working hard and striving to pursue excellence ends up in more production. But the sad thing about our industry is, all that we get caught up on is somebody's production report.
Yeah.
And you're measuring somebody's past. And that's why I always talk about comparison's the thief of joy. And that's from Mark Twain. My sister shared with me that to compare is to despair. And so what happens is we look at one metric of somebody's life and then compare that to our whole.
Hmm.
And so I think the biggest thing is, hey, we want people to live the values. We want people that have a great life because, and we've spent money on life planning for people, but that's always where we start because you can't be great in business if your marriage is having a hard time. You can't be great in business if your health isn't where it could be. And so we want people to have that holistic approach. And so I think the managers that believe in the whole component of helping serve people as people, not serving them as loan officers, is a key. Helping them really achieve their goals and see what their potential is, but also remembering, if I don't want it, even if you think I can, like if you think, hey, Pat, you could do X, Jay, you could do X, Y, and Z. If I don't believe that's possible or I don't want that to be possible, then I'm never going to achieve it. So trying to attach what their goals are to their why and their how, that's a big key. And then I think the other one is figuring out how to be clear on what are the things that we're going to hold the line on and what is the standards that we're going to be disciplined with, because we need to be iron and have firm, to help people be their best.
Well, I got to have you come back because I agree with you 100%. And actually, I don't see a lot of that. But I mean, I definitely agree that you really hit on the core of what the true issue is. And I'm glad that you've mentioned a lot of these issues that have been in our industry, actually, frankly, for a while, for sure. It's not new. So but they're all great points. So, any last comments or takeaways that you could share with our listeners about how you achieve one of the highest in the country for our industry and the productivity side? Sounds like you hire great and you develop. I mean, that does sound in a lot of ways that that's what you're committed to.
Yeah, I mean, I think that's our focus is trying to make sure we make good decisions on hires and then really put a lot of time into helping people reach their goals and provide a lot of resource and support, and I think trying to live out those dailies each and every day, focus on trying to get better each and every day, add more value each and every day. Try to keep the main thing because it's the business. I always hear like, man, this season's really hard. This market is really hard. And I would just say, I think my parting shot would be, I've been in the business since '03, and my reality is it's been hard. It's a hard business. And if it was easy, and if anybody says it's easy, like, come on, like nothing's easy. Nothing that is easy is meaningful. Right.
Correct.
And so you want to have a good marriage, that takes hard work. You want to be a good parent, that takes hard work. You want to have a successful business, that takes hard work. You want to be in great shape, that takes hard work. Doesn't matter what it is. Want to be a great author, going to take hard work. Want to put a great movie together, going to take hard work. So it's March Madness, you want to make it to the championship, it's going to take hard work. So just remember, like, just put things in perspective. You've been doing this for 20 years, you've been doing this 30 years, you've been doing this 5 years. It's hard. And that's good because the only way good things happen is through hard work.
That's so true. That's so true. Well, Jay, it's been fabulous talking to you. It's really been, as I said, I have to have you come back and talk about some more of these topics because I think you hit upon the core issues for sure. How can people get a hold of you if they want to talk more about it?
I'm on Instagram. My handle's here. It's Jay Blackbird Good, which is just kind of a play on my name. I'm Jay and my last name's Crowell, but it looks like it's Crowell. So that's just a fun little play on my name. I'm also on LinkedIn. People can text me anytime. I'm at 206-795-9268. So I'm an open book and I'm available, but I do try to put some information out on LinkedIn, and I put some information out on Instagram, just kind of talking about, head and heart stuff.
No, it's the important stuff for sure. So I want to thank you again. And I want to thank our listeners. Each Monday, we come out with a new podcast of interviewing our super executives in our industry to hear certainly their direction and comments. So subscribe to our podcast. So thanks again, Jay.
Absolutely. Oh, I did forget. We do have a podcast. I do that with Kelly Zitlow. It's a Level Up Loan Officer. You can find that on any of the pieces. So Kelly is a executive leader at Cornerstone and historic top producer out of the Phoenix market. And she's a breath of sunshine and just great. And so she and I, we do have a podcast that is available for people to check out too.
No, Highly recommended. So anyway, so everyone check out Jay's podcast, and certainly, as I said, subscribe to ours. Love to have you. Thanks again, Jay.
Thanks, Pat. Appreciate you.
Check out my new book, Mortgage Manager Mastery, where 23 mortgage sales leaders shared their best practice in managing sales staff. The book is available on Amazon and Kindle or paperback.